Hello friends. These days we see a lot of advertisements of investing in mutual funds. But as we always say, there is no one right investment vehicle that suits everyone. So today, let's discuss about the advantages and disadvantages of investing via mutual fund. By the end of this video, you will be able to understand whether mutual fund investments are right for you or not. So first let's discuss about the advantages of investing via mutual funds. The very first advantage of investing in mutual funds is broad diversification. For many of the investors, investment corpus and cost alone prevent them to achieve adequate diversification without using mutual funds. Suppose you have 10,000 rupees to invest and you think of investing in a portfolio of 20 stocks. You will realize that 10,000 rupees is not enough to get adequate diversification. But with the help of mutual funds, you can get adequate diversification even at low capital investments. The benefit of diversification is much more prominent in bond funds. If you want to own a portfolio of bond stocks, you will realize each bonds come with a minimum investment amount. So to achieve diversification in bonds, you have to have a big corpus. But with the help of bond mutual funds, you can achieve adequate diversification with little capital as well. So the very first advantage is adequate diversification even at lesser investments. The second advantage is professional management. Each fund is managed by a fund manager and a team. The team does all the research, stock selection, asset allocation, everything. And the fund is strictly maintained in accordance with the fund house guidelines and SEBI guidelines. So you can be sure that the fund will provide, if not exceptional, a decent performance with your investments. So the second advantage is your investments are managed by a professional team. The third benefit is liquidity. You can liquidate your mutual fund investments at any point of time, but you can do that with stocks as well. The main advantage comes here at the cost of liquidation. So you can liquidate your investments at low cost you will incur as compared if you do multiple transactions in a stock. So liquidity is another main benefit of mutual fund investments. The fourth advantage is simplicity and convenience. Mutual fund provides a lot of options like automatic reinvestment of dividends, SIPs every month. You can do all that with just few clicks. So this is a simple and convenient process. So the fourth advantage is simplicity and convenience. Now let's look at some of the disadvantages. The very first disadvantage is this is not a personalized investments for you. For example, the decisions taken are general purpose decisions. If you have your own portfolio, you can take certain decisions to optimize your taxes. But in case of mutual fund, these are not personalized investment. The decisions taken are general decisions. The second disadvantage is cost. It comes with a range of cost, fewer direct costs, for example, expense ratio. But there are some indirect cost, example, transaction cost. Now, if the portfolio turnover is very high, it means there's a lot of buying and selling happening in the mutual fund. If that happen, the transaction charges will be high. That will eventually reflect in the performance of the fund. The third disadvantage, or rather challenge, is there are a lot of funds available. Choosing the best fund for yourself based on your investment objective and investment philosophy is a good challenge. To summarize the advantages and disadvantages, after you have worked on deciding the best fund for yourself, the advantages definitely overpower the disadvantages. You can have broad diversification, you can save cost, and you do not have to be actively involved in managing the fund. The fund is managed by a team of professionals that will give you a decent performance. Thank you.